VIPCA, as it is properly now, was established in the year 1997 by the Shyam Young and dynamic professional with the object of providing a common platform to the member. Now more than 800 chartered accountant. Now with the membership strength more than 900 of CA in the Calcutta zone. On behalf of VIPCA, I once again I welcome to all of you and hope after the completion of these sessions will feel enriched with the knowledge. Thank you for all. Now get back to C. Anil Anchaliaji for provide the further program.
Thank you, Rajesh. Thank you. I would like to introduce today's speaker, CA Manoj Tiwari ji. CA Manoj Tiwari did his graduation from St. Xavier's College, Kolkata, and was adjudged National Scholar by the University of Calcutta. He is a fellow member of Institute of Chartered Accountants of India, and he secured 10th rank on all India basis in CA Intermediate examination. He is a managing partner of Manoj Tiwari and Associates Chartered Accountants. He deals mainly with direct taxation matters and has adroitness in appellate proceedings before the honorable tribunals across India. He has a good academic interest too. He acted as faculty for various students programs conducted by EIRC of the institute and presently acts as faculty for different management institutes. He is a regular speaker in CP programs organized by EIRC of ICAI and various branches of EIRC and study circles. He is a member of Direct Tax Committee of EIRC for the year 2021 and 22. He also contributes various articles in various journals and other publications. With this, I welcome CA Manoj Tiwari ji once again, and I would request the participants to drop their queries in the chat box so that we can discuss those queries after the completion of the deliberation. With this, I hand over the proceedings to Mr. Manoj Tiwari ji.
Okay, I'm sharing the screen.
Yeah. Thank you.
Recording in progress.
Just a minute. Give me just 1 minute.
No issue, sir. No issue. Please take your time.
Can you allow the share screen?
Sir, you are a co-host, sir. You can share the screen, sir.
Okay. fundamentals of tax audit. Basically, friends, it's a very small slide. Few things are there. Next. First thing is, as per Companies Act, under section 141, subsection 3, if you are disqualified, then you cannot be tax auditor also. You know, tax audit is one of the audits prescribed in the Income Tax Act. That is section 44 AB audit. So if you are disqualified under Company Act, you can't be tax auditor. But it is not applicable for proprietorship and partnership firms, to be very precise. Let's remember this. Next one, Anilji. Next. Friends, 3 questions. If you are in practice and giving accounting services to a subsidiary, can you conduct tax audits of its holding company? First question. Second, can an internal auditor of a company issue Form 15 CB certificate for that company? And third question, can a CA in practice who is giving accounting services to holding company issue MAT in Form 29B, certificate of MAT, to his subsidiary company? Can I get the answer in the chat box? Any answer in the chat box? No answers. Basically, in all the 3 cases, you can't do. You can do. Yeah, Binayji has given no. Yes. You cannot conduct tax audit. You can't give 15 CB certificate, and you can't give certificate for MAT in Form 29B to his subsidiary company. Very correct. Next one. Friends, tax audit under section 44 AB, we can issue certificate either in Form 3CB or in Form 3CA. Under Form 3CB, when you are issuing audit certificate, it can be under 5 clauses from A to E. And if the organization is audited under any other law, if the organization has been audited under any other law, then as per third proviso, you are giving audit certificate, then it will be as per Form 3CA. Now, friends, tell me, any audit report format is prescribed in which act? Audit report format is not prescribed in any of that. Audit report format is prescribed as per SA 700. Whether you are auditing or you are giving audit report for a housing company or a limited company or NBFC or a proprietorship firm or a partnership firm or an LLP or a LLP, the audit report format is prescribed as per SA 700. You have to issue audit report as per SA 700. Next, Anilji. These are the 5 clauses. Clauses A to E. If you are issuing audit report in Form 3CB, it has to follow any of the forms. Form A, B, C. Just see, these are the 5 clauses. What are the clauses? Turnover exceeding 1 crore or 10 crore. From this year, it is 10 crore, provided 5 payments and receipts both are subject to certain condition. Your cash receipt should not exceed 5% of total receipts, and cash payment do not exceed 5% of total payments. Both the clauses have to be fulfilled. Now, second one, when your professional income exceeds rupees 50 lakhs. Third one, when you are declaring income, declaring business income either under 44 AE, 44 BB, and 44 triple B. But you are declaring income which is lesser than deemed income. Suppose 44 AE, 7,500 per month, your 10-tonner vehicle. Then, but you are not declaring 7,500 per month. You are declaring 6,000 per month. In that case, since your income is less than deemed profit as prescribed under 44 AE, 44 double B, 44 triple B, then you have to give audit report in clause C. Clause D, if you are declaring professional income and your deemed profit you are declaring is less than 50% of turnover, plus your total income exceeds maximum amount not chargeable to tax, then clause D. Clause E, when you are declaring profits as per 44 AD, but this year you have opted out of 44 AD. Once you have opted out of 44 AD, then for current year plus next 5 years, you have to declare profit as per in clause. You have to declare profit and you have to issue form 3CB when you have to issue form 3CB, and you have to do audit as per audit report in clause E, 44 AB clause E. Condition is you have opted for 44 AD. If you are falling under 44 AE subsection, Anil ji is host. Okay, no issues. You have followed. You have opted out of 44 AD. Then current year plus next 5 years. Current years plus next 5 years. You have to do audit as per clause E. Means you have to maintain books of account and you have to follow tax audit. Next, Anil ji.
So this one?
I was in clause A to E and then next one.
This one. Okay.
Clause A to E.
This one.
I'm not able to see the screen now.
Just a minute. Just a minute.
No issue, no issue.
Yeah.
Yes, next one, Anil ji. Yes. Form Rule 6G prescribes the audit report format. We all know. Next one. Now, for friends, as I told you, if you are audited, if your organization accounts are audited under any other law, then Form 3CA, and if not under any other law, then Form 3CB. Here, there are a lot of examples, lot of questions. You may have a lot of issues also. I'll ask few questions. I have something in my mind. Just assume that a private limited company was incorporated on 1st February 21. 1st February 2021. Turnover for next 2 months for the 2 months period, turnover is 6 crore. So audit or tax audit is required, provided, or make it 16 crore, no issue. Then audit report is required. Which form? Form 3CA or Form 3CB? Private limited company. My question is, a private limited company has been incorporated on 1st Feb 2021, 1st February 2021. Turnover up to 31st March 21 is 6 crore. Audit report is required because assuming that your cash receipt is more than 5% of total receipt, cash payment may not be more than 5%, but since cash receipt has exceeded more than 5% of total receipt, it has to go for audit. Which format? 3CA or 3CB? Participants, 3CA or 3CB? One participant is saying 3CA, another one is saying 3CA, one is saying 3CB, another one is saying 3CA.
So also, I have a query that regarding LLP, which form is required, 3CA or 3CB?
LLP if LLP is audited, since if turnover is more than 40 lakhs, LLP is audited under any other law, then
Okay.
naturally 3CA.
Okay.
But I'll come to that. I have a
Okay.
bigger question on that. So a house is divided. Somebody is saying 3CA, somebody is saying 3CB. Friends, you must be knowing the provision. If your organization, if a company is incorporated, Company Act 2012, 13, if a company is incorporated on or after 1st Jan of any financial year, on or after 1st January of any financial year of the company will mandatorily close on 31st March next year. On 31st March next year. So for the year ending 31st March 21, company is not going audited. Company is not being audited. Since company is not being audited for the year ended 31st March 21, since company is not being audited for the year ended 31st March 21, company accounts have not been audited, then it is 3CB for the year ending 31st March 21. What about next year, 31st March 22? What about next year, 31st March 22? Next year, start answering. For the year ending 31st March 22, good number of answers, very good number of answers. Everybody is saying 3CA. House is not divided, it is 3CA only. One person has come, Bagaria has come, 3CB. Again, house is divided. For next year also, 3CB. You ask me why? The question is very simple. For the year ending 31st March 22, company accounts will be for the period 1st Feb 2021 till 31st March 22. That is period of 14 months. Period of 14 months. But income tax requirement is 12 months. For income tax requirement is only 12 months. So since 12 months account have not been audited for the company, for the year period ending 1st April to 31st March, account has not been audited. Because it has been audited for 14 months. So this year it will be again 3CB. This year it will be again 3CB. It will be 3CA for year ending 31st March 23. It will be for the year ending 31st March 23. It will be 3CBA. There is another question, very good question. A 25-year-old company or 25-year-old company is converted into LLP in October 20. On 1st October 2020, a 25-year-old company is converted into LLP. Now, first 6 month company, next 6 month LLP. When you are issuing audit report for the company, company is no longer in existence. You will appreciate when you are issuing audit report, suppose in the month of November 2021, you are issuing tax audit report. Company is no longer in existence, so it will be 3CB for the company. And for LLP, my friends, LLP accounts have been audited under any other law. So LLP accounts last 6 months, it will be 3CA. It will be 3CA. Next slide, Anil ji. Form 3CD. Here we have to put, there are 44 clauses. Out of that, last one is not required this year. So in all those clauses, there are onerous requirements. We have to fulfill that. Next clause, Anil ji. You must be knowing that tax audit, if it is not done, penalty is 0.5% or 1.5 lakhs, 0.5% of turnover or rupees 1.5 lakhs, whichever is lower. Next one. I'll give you 4 examples. Now, we all know 44AB, 44AD, 44ADA. So friends, first example, Mr. A started manufacturing. This is first year. Turnover 150 lakhs, net profit 8 lakhs, total income 8.5 lakhs. We cannot opt for AD because net profit is 8 lakhs, minimum 6% even if digital. So AD can't be opted. Turnover has exceeded 1 crore. Turnover has exceeded 1 crore. Friends, from assessment year 21-22, one proviso has been added. Either proviso has been amended. Amendment is if 5% of cash receipt, if cash receipts are not higher than 5% cash receipt, your receipt in cash as well as payment in cash do not exceed 5% of total receipt and 5% of total payment. Cash receipt component should not exceed more than 5% of total receipt, and cash payment component should not exceed more than 5% of total payments. In that scenario, even if your turnover is 10 crore, no tax audit is required. If turnover exceeds 10 crore, then tax audit is required in any case. Now, let's take this example. Here, assuming that cash receipt component and cash payment component both violate the condition. That is, cash receipt is 10% of total receipt, cash payment is total cash payments are 10% of total payment. So that proviso is violated. So your tax audit is required when your turnover exceed 1 crore. So here AB AB because here AB is required because net your turnover has exceeded 1 crore, because your turnover has exceeded 1 crore. So AB, tax audit under AB is required. Next one. Second example, Mr. B, trading turnover 90 lakhs, net profit 10 lakhs. He is also a doctor. His earning from fees 45 lakhs, net profit is 25 lakhs. Total income is 32 lakhs. Now, since he is a doctor, he is a professional, and he is opting for 44 ADA. Friends, you must remember that if you are opting for 44 AD, who are the persons who cannot opt for 44 AD? If you have 5 types of income, you cannot opt for 44 AD. That is, you have commission income, you have brokerage income, you have professional income, you have income under section 44 AE, that is income from vehicles, and agency income. Commission, brokerage, professional income, 44 AE income, agency income. You cannot opt for 44 AD. He is a professional, so he cannot opt for 44 AD. And look at it, doctor, fee is 45 lakhs, net profit from profession is 25 lakhs. Means his income is more than 50%. His income from profession, net profit from profession is more than 50%. That is 50% of 45 is 22.5. His net profit is 25. So he can opt for 44 ADA. Since he has opted for 44 ADA, he cannot opt for 44 AD, and tax audit is not required. Next one, Anilji. Look at this. Mr. X, trading, he is in trading. Turnover 80 lakhs, net profit 4 lakhs. Total income 3 lakhs. Friends, what will happen in this case? People say that it can opt for. People say that here Mr. X can opt for tax audit, or he can opt for 44 AD. Please understand, suppose here the turnover is less than a crore. Here the turnover is less than a crore. Since turnover is less than a crore, then he cannot opt for 44 AB. He cannot opt for 44 AB. AD can he opt for? Look at it, 80 lakhs, net profit is 4 lakhs. Since net profit is 4 lakhs, he cannot opt for 44 AD. So how he will survive? He will prepare his books of accounts. He will prepare his books of account, PL balance sheet, and submit it. Now people say that since his income is less than a crore and he is not showing deemed income as per deemed profit. Deemed profit was 8% or 6%, suppose 8%. 80 into 8 is 6.4 lakhs. His net profit is 4 lakhs. So some people say that he has to go for tax audit. How many persons feel that Mr. X should go for tax audit? How many persons feel, how many of the participants feel that Mr. X should go for tax audit? Answer in the chat box. How many of participants feel that Mr. X should go for tax audit. One participant has answered. Other answers, please. Another has answered. Other answers, please. Third one has answered. Even if yes, another answer. Other answers. There are only 97 participants. Yes, Mr. A. Yes, everybody is saying go for tax audit. So nice. 4 answers are there. 5th answer also says go for tax audit. Yes, I'm not naming the participants. 6th participant also says go for tax audit. I better disagree with all the 6 answers. One answer has said that is no tax audit. Friends, if turnover is less than a crore, all you have to do is prepare books of accounts, prepare balance sheet and PL, and file it as it is. 44, if you were not following 44 AD in earlier years. Let's take a case. 44 AD, you have opted in the assessment year 2021. You are doing 44 AD. Even if you have done that, please remember, once your turnover is less than a crore, once your turnover is less than a crore, 44 AD will not apply. Why, my friends? Because 44 AD, simple. It is applicable between 1 to 2 lakhs. It is applicable between 1 to 2 lakhs. Look at it. There are 5 clauses of tax audit. There are 5 clauses of tax audit. Lowest trading income or anything A. Under which clause you will go for tax audit? And last one was E. If you had been following tax 44 AD in earlier years, if you had been following 44 AD in earlier years and you are opting out of it, then you have to go for tax audit. That is clause E. Otherwise, if your turnover is less than a crore, you cannot go for tax audit. If there is any confusion, we will talk about it at the end.
So, sir, in previous year, if he has opted 44 AD,
Yes.
And this year he is showing income less than 8% or 6%.
Yes.
So
But
tax
his
audit is,
turnover, just imagine, in that scenario, he can go for tax audit under clause E.
yes.
But otherwise,
Yeah.
he
Participants
cannot
have
go for tax audit.
answered means for that only, I think.
Otherwise, he cannot go for tax audit. And
Is it-
here the thing was silent. I did not give whether it is first year, second year, third year.
Yes.
Intentionally.
Right.
Right. If your turnover is less than a crore, you are not required to go for tax audit. Last one is a simple one. Turnover, trading turnover 95 lakhs, commission income 6 lakhs, net profit 15 lakhs, total income 14 lakhs. Since you have commission income, you cannot go for 44 AD. Though your income is 15 lakhs from trading. Now, so he will go for tax audit because his turnover has exceeded 1 crore, 95 plus 6. His total income, his total turnover has exceeded 1 crore. He will go for tax audit. Next, Anil ji. That 5%, the phenomena, 5% of cash receipt, 5%. Here I'm talking about receipts. He has 4 crore sales, out of which 15 lakh is in cash. Partner has introduced 10 lakh in cash. Loan 15 lakhs by NEFT. So what is the total receipt? 4 plus 10 plus 15. Total receipt is 425 lakhs. Cash receipt is 10 plus 15, 25 lakhs. Here cash receipt is more than 5% of total receipt. How come? Total receipt is 425 lakhs. 5% of that works out to 21.25 lakhs. Here cash is 25 lakhs. So here cash receipt have exceeded 5% of total receipt. So tax audit is mandatory beyond a turnover of 1 crore. No issue. Now tell me, is tax audit mandatory or optional? Is tax audit mandatory or optional? One answer has come. Tax audit mandatory or optional? Let me clarify my question. Suppose this year you have your non-tax audit submission date is, return submission date is 31st December, right? So, and tax audit submission date is 15th Jan and ITR submission date is 15th Feb in case you have tax audit. Suppose your turnover is 90 lakhs and you are opting for tax audit. Will it extend your due date to 15th February? By opting for tax audit optionally, will that extend your due date of filing ITR to 15th February?
No.
One answer has come, no. Naturally, no, because tax audit is not optional. Opting for it optionally will not extend the due date beyond the stipulated date. Opting for it optionally will not extend the due date beyond the stipulated date. So this part is okay. Next one, Anil ji. Another example. ABC and Company formed in the assessment year 2021. Turnover 1.25 crore, 44 ABA, because more than 1 crore. Next year, 21-22, turnover 1.995 crore. If cash receipt and cash payment both are less than 5%, would there be tax audit under 44 AB? If cash receipt and cash payment are both less than 5%, would there be tax audit under section 44 AB? No, very correct, very correct. One answer has come, no. because the turnover up to 10 crore, you may not go for tax audit. Can it avail 44 AD? If yes, of course, if its income from the turnover is greater than 6% or 8%, it can avail 44 AD. Because opting for 44 AD does not stop you, because last year he opted for tax audit. So next year he can opt for 44 AD. But once you have opted for 44 AD in the previous year, if you wish to opt out of 44 AD in the current year, then you are opting it out not for this year only. You are opting it out for this year plus next 5 years. Then Form 3CA. Friends, under Form 3CA, you will find 3 paras only. And Form 3CA, once you are opting for, it means accounts have been audited under any other law. So any observation, qualification you have to give with regard to 3CD, it has to come in para 3. Any observation, any qualification you have to give regarding Form 3CD, it has to come in para 3. Next, Anilji. And it has to be signed by person eligible. If you are ineligible under Companies Act, you cannot do tax audit, and you can naturally you can't issue Form 3CA. Very correct. Next one. Under 3CB, there are 5 paras. Any observation you wish to give regarding accounts, suppose related party transaction, any observation you wish to give, it will be in for regarding financial statement, it will be in para 3. And any observation with regard to Form 3CD, it has to be in para 5. We close our screen. Anilji, no more share screen required. Thank you. Friends, so now we will talk about interesting issues, critical issues in tax audit. Regarding critical issues in tax audit, basically we have some idea about fundamentals. So let's discuss some very critical issues which impact us. How to reconcile the conflict which do arise at times in reporting requirement and interest of the assessee. I'm conscious at the same time that I can't visualize we, the tax auditor, to be seen looking the other way. We have to report fact as immaculately correct, and at the same time, while reporting on the issues on which we have to express opinion, we have to exercise discretion wherever are warranted in proper perspective. The discretion, like any other discretion, can't be afforded to be arbitrary or subjective. The discretion has to be based on objective consideration. So I'll speak from the perspective of how to use our discretion in such a way that it results in a win-win situation, both for the assessee as well as auditor. Anilji, is sound all right, na?
Yes, sir.
Okay.
Okay.
Friends, law is not only what is written in the act or law as it is understood by courts. Sometimes courts only understand the law that is written, you will appreciate, friends, that many a time language is used in the act are ambiguous and unclear, and thereby leaving the scope for the courts to interfere. Many a time there will be tussle between rule of literal construction versus rule of purport, rule of object, rule of intent. Many times we find that the party rely on letter of the law, whereas judges or opposite party rely on purport, spirit, object, intent of the law. Report on clauses, my friends. When we are talking about clauses, reporting on clauses, there are two types of clauses. There is one type of clause where you have to report fact, and there is other type of clause where you have to express your view, your opinion. So, but when you have to express fact, when you have to report fact, when you are reporting about fact, it has to be immaculately correct, because as a chartered accountant, you have mastery over the factual description. There can't be two facts, friends. Please understand. There cannot be two facts. There can't be any leeway or benevolence or dilution or ambivalence on this account. There are other clauses, my friends, where you have to exercise your discretion or you have to express opinion. You have to compute disallowance in accordance with law. There are certain areas where there are inconvenient reporting requirements. There we have to devise ways to report on the clauses in such a way that it results in a win-win situation for both assessee as well as auditor. Friends, first clause I'll be talking. Let's discuss few clauses over here so that I'm able to make you understand what I mean by how to devise. So clause 20, subclause A. Any sum paid to an employee as bonus or commission for services rendered, where such sum was otherwise payable to him as profits or dividend. Any sum paid to an employee as bonus or commission for services rendered, where such sum was otherwise payable to him as profits or dividend. Section 36, subsection 1, clause 2. Here you have to report, you have to compute disallowance. Now, friends, in case of partnership firm, remuneration payable to only working partner is allowed. So you have to ensure that all partners are working partners. In case of privately held company or closely held company, if you are paying bonus or commission, never pay bonus or commission. Friends, one thing more before I start discussing. Friends, I'll be as tax auditor in case of SMP firms, in case of small and medium size firms. Our role is tax auditor as well as tax consultant. Our role is tax auditor as well as tax consultant. So I'll be frequently changing the hat. Sometime I'll be tax auditor, sometime I'll be tax consultant, because normally we are like that. And I also expect you to do the same. For privately and closely held company, if company is paying bonus or commission in the same ratio as ratio of shareholding, then AO can think about it, that it has been paid. Since it has been paid in the ratio of shareholding, if it had not been paid, it would otherwise payable, it was otherwise payable as profits or dividend. So when you are in case of private limited company or closely held company, when you are paying bonus or commission, never pay bonus or commission. Advise management, don't pay bonus or commission in the ratio of shareholding. And there should be at least one shareholder who has not been paid bonus or commission. If you can follow this, then naturally there can't be any addition on this account. And of course, you have got some basis. In case of, I'll give you one Supreme Court case law, Gestetner Duplicatus Private Limited. Gestetner Duplicatus Private Limited, reported at 117 ITR 1, 117 ITR 1. Commission paid as fixed percentage of turnover is nothing but accessible as salary. We are not saying, Supreme Court has said. Another one, Sahjada Nand and Sons, reported at 108 ITR 358, 108 ITR 358. Supreme Court held commission paid to employees is allowable and there is no need for any contractual obligation. So, if bonus or commission is paid to director, it is part of remuneration. So once we are basing our opinion on the basis of these judgments, we can, even if disciplinary committee calls us that why didn't you report, so we can say that, sir, we relied on this judgment. There are Delhi High Court judgment 341 ITR 563, 341 ITR 563, 358 ITR 179. For services, directors are paid bonus and commission, and bonus or commission were not paid to directors in the ratio of shareholding. Since it was not paid in the ratio of shareholding, there is no question of applicability of 36(1) Roman 2. That is, there is no question of applicability of section 36 subsection 1 Roman 2. So this clause is covered. Next is clause 20 subclause B. What is this clause 20 subclause B, my friends? You remember section 36 subsection 1 clause VA. 5A you say, clause VA I am saying because it is alphabet V. Any sum received by SSC from any of its employees to which provisions of 224(10) apply, if such sum is credited by SSC to employee account in the relevant fund or fund on or before due date. I'll make it simpler for you, friends. Suppose employee has contributed for provident fund, or employee has contributed for ESI. That will be added to the income of employer under section 2 clause 24 subclause 10 224(10) if such contribution by employee is not added to the relevant fund, employee relevant fund on or before due date. What is the due date? As we were thinking about section 43B. As per section 43B, due date is due date of filing of return of income. But this year, my friends, please remember, this year explanation 2 has been added, which says, for the removal of doubts, it is hereby clarified that provisions of 43B shall not apply and shall be deemed never to have been applied for the purpose of determining due date, applicable from assessment year 22, 21, 22. So whenever you are preparing, you are checking form 43B, sorry, form 3CD, please ensure that the payment, the receipt from employee, the contribution of employee must be credited to his account on or before due date, means due date as prescribed in the Provident Fund Act, due date as prescribed in ESI Act. So what is the present position of law? Present position of law is deduction of PF and ESI if not paid on or before due date. It is allowed and will be denied forever. It will be disallowed for the current year and it will be denied forever, irrespective of payment after due date. So this is present position of law, my friends. All sections, all case laws we are quoting is going for the toss. Clause 21, subclause A, personal expenses. Personal expenses, if you report something, then adjustment is bound to be made by CPC under section 143, subsection 1, clause A. And nobody knows when litigation will end. But friends, I'll advise something for you. Company is an artificial juridical person. Company is an artificial juridical person, and there can't be any personal expenditure in case of companies. One of the case laws, prominent case law is 253, 253 ITR 749. Sayaji Iron and Engineering Company versus CIT. It says, assessee, which is a private limited company, is a distinct assessable entity as per definition of person under section 2, clause 31 of the Act. Therefore, it can be stated that when the vehicles are used by directors, even if they are personally used by directors, vehicles are personally used by company. They say that it is used personally by the company. But friends, company is an inanimate person. Any company, private limited company or limited company, is an inanimate person. Means no sign of life. What inanimate means? No sign of life or lifeless person. And there can't be anything personal about such an entity. So even if cars are used personally by directors, no personal expenditure for the company, and for company, expense is always incurred wholly and exclusively for business. This is one thing. For company, there can't be any personal expenditure. Next one, depreciation, my friends. Depreciation is a statutory allowance. Depreciation can never be personal expense for use of car by proprietor or partner. But AO tends to disallow depreciation. Friends, I'll give you one case law. 92 ITD 349, authoritative case law. 92 ITD 349, Mumbai bench. Famous Mukesh Shah case. Depreciation not to be treated as personal expenditure. Depreciation is a statutory allowance. Statutory allowance can't be restricted on the basis of volume of business and personal use. Condition to be satisfied is that assets should be owned by assessee and it should be used for the business or profession. Personal use of car cannot fetter. Personal use of car cannot fetter granting of disallowance, statutory allowance. Therefore, disallowance made on this account is deleted. No personal use of car because depreciation is statutory allowance. Please remember. So this part. Then clause 21, subclause A, penalty. Normally, when you hear penalty, it seems penalty is always disallowed. But I'll give you certain case laws, I'll give you certain situations where you can you may not say that penalty is disallowed. It is considered that penalty paid for violation of law is opposed to public policy, and violation of law can never be part of your business. The said penalty can't be presumed to be incurred for carrying on of your business. To commit default in law is none of your business, and it can't be even least part of your business. If you report, it will be disallowed. So infraction of law or violation of law, only penalty is debited to profit and loss account. Please note, only if penalty is debited to profit and loss account, then only it has to be reported. But a penalty paid by proprietor or partnership firm for infraction of law has been debited to capital account, then it can't be reported. If penalty is in the nature of compensation, if penalty is compensatory in nature or in the nature of compounding fee, it is allowed. I repeat, if penalty is compensatory in nature or in the nature of compounding fee, it is allowed. Calcutta Tribunal 172 ITD 157. 172 ITD 157. Kolkata Tribunal, Business Expediency. 46 SOT 258, Mumbai Tribunal. Trailer, disproportionate size cargo. Compounding fee was held allowable. Another Supreme Court judgment, 205 ITR 163, 205 ITR 163, Ahmedabad Cotton Manufacturing Company. Amount paid by assessee in exercise of option as provided by law. The very law in which penalty was provided, in the same law, compounding fee has been provided. So if you opt for this, that compounding fee is also allowable, because you see, different high courts have not concurred on the same fact, on the subject matter of compounding fee. Different high courts have not concurred. So who we are far lesser mortals. We can decide in favor of assessee as we are lesser mortals, as different high courts have not concurred on the same fact and have pronounced divergent decisions. And naturally, our opinion is of course within the four corners of law. Other penalty, contractual obligation. Penalty paid for non-performance of any contractual obligation. Penalty paid for non-performance of any contractual obligation is always allowable expenditure. Normally, you'll find liquidated damages. Liquidated damages we pay, though the contract under which we pay terms it as penalty, but it has been paid for violation of contractual obligation. Since we paid liquidated damages for violation of contractual obligation, it cannot be treated as violation or infraction of law. It must not be treated for violation or infraction of law and hence allowable expenditure. So any penalty paid for non-performance of any contractual obligation is always allowable expenditure. Please note, my friends, please note, we should always remember that nomenclature used is an agreement. Nomenclature used in an agreement or books of account or the manner of putting entries in the books of account. What nomenclature you are using in an agreement or books of account or manner of putting entries in the books of account is not truly determinative, of allowability or disallowability of an item. That penalty paid for late delivery of goods, 271 ITR, 271 CTR, sorry, 271 CTR 591, Gujarat High Court, late delivery of goods. 271 CTR 591. One ITR citation also. 222 ITR 772, Punjab and Haryana High Court. 222 ITR 772, late delivery of goods, allowable expenditure. Next, clause 21B. What is this? Amount inadmissible under section 40 clause A. What is 40 clause A? That if you have failed to deduct TDS, then an amount debited to profit and loss account is disallowed, right? And total amount is not added, only 30% is added. You must be remembering, my friends, that 40 AIA and all, only 30% is disallowed. But on absolute failure, disallowances to be made. There is a Calcutta High Court judgment, SK Tekriwal, 361 ITR, 361 ITR, 432, Calcutta High Court, friends. Even if part deduction of TDS has been made, even if part deduction of TDS has been made, then it is allowable expenditure. Suppose TDS deductible is 5%, normal, prescribed in that. Even you have deducted 1%, no question of proportionate disallowance. Even if part deduction has been made, then it is allowable. Clause 21, subclause C. Amount debited to profit and loss account being interest, salary, bonus, commission or remuneration inadmissible under section 40 clause B or section 40 clause BA. That is, amount paid to salary as salary, interest, bonus, commission or remuneration to partners in case of a partnership firm. Amount debited to profit and loss account being interest, salary, bonus, commission, remuneration, whatever paid to partners in a partnership firm. First, understand, friends, only salary paid to working partner is allowed in case of a firm. So, if there is one document even to show that partner is working, suppose some partner has come, he never comes to office. You make him sign 5-6 vouchers, you make him sign one check. Even that document can prove that he is a working partner. One thing you must remember, my friends, that nothing should be left to the discretion of partners, and everything should be provided in the deed, in the partnership deed, in a meticulous and unambiguous manner. Provision of salary in the deed is very important. Provision of salary in the deed is very important. And it should be provided in the deed in a meticulous and unambiguous manner. That is, mode, manner, and determination of quantum. Mode, manner, and determination of quantum must be specific in clear-cut terms in the deed itself. If it is provided in the deed in clear-cut terms, then it is always allowed. One question, my friends, can HUF receive salary? Can HUF receive salary? Chat box. No, 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 no. Very good answers. Very good answer. Yes, HUF can't receive salary. Participants are active. They are not sleeping, at least I understand. Can HUF receive salary? In Rasik Lal and Company versus CIT, reported at 229 ITR 458. I remember it 229 into 2. 229 ITR 458. Rasik Lal and Company versus CIT. Can HUF receive salary? Court, so Apex Court, Supreme Court observed as under. Hindu Undivided family is not and can't be a partner in a partnership firm. Remuneration or commission that is paid to partner can't be claimed to be remuneration or commission paid to HUF. Another High Court judgment, Calcutta High Court judgment. Sorry, Allahabad High Court judgment, 347 ITR 325. 347 ITR 325. Once it is held that HUF can't be a partner, but the Karta which he joins is for all purposes an individual. As held in Rasik Lal and Company, a partner can't be heard to say that he has received the commission as a partner of the firm, but in different capacity. Whatever Karta is receiving in his individual capacity. Then there is very important clause, clause 21, sub clause D. I'll try to cover 6-7 more clauses, and I'll try to make you understand why I'm trying on case laws, why I'm depending on case laws. You will also understand there is onerous requirement on us. We have to cover every clause and we have to report. But what are the way outs where I can create win-win situation both for me as well as client? Clause 21, subclause D, disallowance or deemed income under section 40A3 and 40A3A. 40A3, if your payment in cash beyond a specified limit, it is disallowed. And 40A3A, provision made in the current year, in subsequent you are paying, you pay subsequent in the subsequent year more than the specified limit in cash, then it is income, deemed income. So disallowance or deemed income. All the decisions I'll be referring to belong to the period when clause G is not there as part of Rule 60. What was clause J, my friends? Clause J, what was clause J? All the decisions I'll be referring to belong to period when clause J is not there in the books, not there as part of Rule 6DD. Clause J, what was clause J? Clause J was where payment was required to be made on a day, where the payment was required to be made on a day on which banks were either closed, either on account of holiday or strike. That was clause J. The banks were closed either on account of holiday or strike, then you can pay in cash. But this clause J was omitted from the statutory books. So if discretion is exercised, if you are exercising our discretion, it has to be on objective consideration. If it has to be on objective consideration, what is our way out? We have to fall back on judicial exposition. We have to fall back on judicial exposition. So friends, first let's understand why 40A3 was brought in the statute book. 40A3 was brought in statute books as anti-tax avoidance measures. Anti-tax avoidance measures in 1968, 53 years prior to this date. Purpose was to disallow the claim of fictitious expenses. In any case, purport and object of section, when it was introduced, has to be seen for its proper perspective. What is cardinal rule of interpretation? Cardinal rule of interpretation is rule of literal construction. If elasticity and leverage is available by judicial expositions, we can resort to discretion objectively. First case law I'll be referring is reported at 401 ITR 486. 401 ITR 486 Delhi High Court. If identity of pay is established and genuineness of transaction is not in doubt, then the expenditure is allowed, though it is paid in cash. 401 ITR 486. Next case law, 412 ITR 351. Karnataka High Court. 412 ITR 351. Karnataka High Court. It said, main purpose of crossing a demand draft is to ensure that payment is cleared by means of an account. That is, payment is deposited in the bank account of person in whose favor demand draft has been drawn. It ensures that pay receives the payment and it is routed through bank channels. In the fact of this case, both have been proved. Bank report would indicate that demand draft were admittably not crossed. However, payment were credited into account of pays. Therefore, object with which 40A3 was promulgated stands satisfied with such material, and hence the expenditure, though payment has been made in cash, is allowed. So please, friends, let's understand that since we have fulfilled the conditions, 162 DTR 118, Rajasthan High Court. 162 DTR 118, Rajasthan High Court. Purchase of agricultural land from several rural village people in cash is allowed. Court said it was not possible to expect villagers to accept sale consideration by account paycheck. High Court has said we are lesser mortals. 157 DTR 198, Vizag Tribunal. 157 DTR 198. If intent is genuine, if intent is real and genuine, then expenditure is allowed, although it is paid in cash. One basic principle I wish to talk about. Friends, if business profits are estimated by AO, if business profits are estimated by assessing officer, then courts have held that all the estimated or artificial disallowances are subsumed in the profit estimated. Meaning, when business profit are estimated by assessing officer, either after rejecting books of account or after not rejecting books of account, then those all artificial disallowances can't be resorted to. Suppose AU has added 4% of turnover as business profit. Then he cannot go for 40A3, section 68. These are known as artificial disallowances. I'll give you certain case laws. 229 ITR 229, 229 ITR 229, 409 ITR 85, 409 ITR 85 Rajasthan High Court, 377 ITR 568 Madras High Court, 377 ITR 568 Madras High Court. Next, friends. Clause 21, subclause G. Clause 21, subclause G. Particulars of any liability of a contingent nature. Particulars of any liability of a contingent nature. That is, provision for contingent liability is disallowed. Provision for contingent liability is disallowed. Friends, just imagine this is what is contingent liability, what is a firm liability. What is a contingent liability and what is a firm liability. Law always keeps on evolving. Firm liability is allowed, but contingent liability is disallowed. So provision for leave encashment is contingent liability and it is disallowed. But what about provision for warranty? Provision for warranty, whether it is firm or contingent. Provision for warranty, whether it is firm or contingent. Participants, provision for warranty, whether it is firm or contingent liability. We are 105. Answers, please. Provision for warranty, whether it is firm or contingent. Yes, my friends, provision for warranty seems like contingent looking liability. But if you travel deeper, you may find that the liability is real, firm, and not contingent. What is contingent is quantification of liability. What is contingent is quantification of liability, and quantification lies in the womb of nature, womb of future. But if liability is determined, provision for warranty is determined or estimated on the basis of empirical evidence of the past, exponential backward working, projections on the basis of past behavior, past experiences, and scientific basis, then it is allowed as expenditure. Last word on this is rotork control, ROTORK, rotork control 314 ITR, 314 ITR 62, Supreme Court. 314 ITR 62, Supreme Court. At this stage, we again may reiterate that liability is a present obligation arising from past events, settlement of which is expected to result in an outflow of resources and in respect of which a reliable estimate is possible of the amount of obligation. So provision for warranty is liability in present time, though it looks contingent, but liability is real liability, firm liability. Clause 21, subclause H, section 14, capital A, section 14A. Friends, this section has lost its charm. You must be knowing why. This section 14A has lost its charm from assessment year 21-22. Because dividend is not exempt from this year onwards. As we all know that dividend is not exempt income. This section was only in the process of evolution, but it has been given a quiet burial. But there are three important things on this. If there is no actual exempt income, there can't be disallowance. If there is no actual exempt income, then no disallowance. You cannot compute disallowance. You may not compute disallowance because in reality, no exempt income has been earned. Case law on this 378 ITR 30, 378 ITR 30. Then next one, for computing disallowance under Rule 8D. While we were computing disallowance under Rule 8D, friends, you remember, we used to calculate average investment. What was average investment? Opening plus closing by 2, average of opening and closing investment. Average investment will only be worked out for those investments on which exempt income has been earned during relevant financial year. If there is a dividend on an investment during the year, if there is earning of dividend on an investment during the year, only that investment will be part of opening and closing. So language is very simple. Average investment will be worked out only for those investment in opening and closing on which exempt income has been earned during relevant financial year. 374 ITR 108. 374 ITR 108. And third one, disallowance can't exceed actually exempt income. Disallowance cannot exceed actually exempt income. 372 ITR 694. 372. I have seen cases where exempt income is 6,000. Disallowance has been worked out at 12 lakhs. But case laws were there. Now there is more clarity on this. Clause 21, subclause I. Clause 21, subclause I. Amount inadmissible under the proviso to 3613. What is the proviso? Proviso says, provided that any amount of interest paid in respect of capital borrowed for acquisition of an asset or for extension of existing business or profession for any period beginning from the date on which capital was borrowed for acquisition of asset till the date on which asset was first put to use shall not be allowed as deduction. So if it is capital expenditure, if interest is treated as capital expenditure, then naturally they will not be allowed as revenue expenditure. Till the date asset is put to use, interest incurred is capital expenditure. Very simple. Now, 3613. Basically, the disputes were galore over here. So many disputes. Section 3613. Section 36, subsection 1, clause 3. AO used to disallow that since there is non-business use of borrowed fund, AO used to disallow, or still they are disallowing, for non-business use of borrowed funds. See, the rule is very simple. If borrowed funds have been used for the purpose of business and you have paid interest, then interest paid will be allowed as business expenditure. If borrowed funds have been used for the purpose of business and you have paid interest, then interest paid will be allowed as business expenditure. Tax auditor has to compute disallowance for non-business use of borrowed funds. So we should exercise our discretion very objectively and consciously, because once allowance is computed, then assessee auditee has to take the hit, and no one knows till what stage dispute will stagger or when dispute will end. Even Supreme Court, it may not end because the law is amended retroactively. If there are indications that borrowed funds have not been used for the purpose of business, then we have to check and track the source of funds which have been used for non-business purposes. But if there are sufficient taxable profits, that also covers non-business use of funds. If there are sufficient taxable profits that also cover non-business use of funds, a view may be taken that borrowed funds have not been used for non-business purposes, and internal accruals from business have funded non-business use. That if there is only if there is a clear direct one-to-one correlation of borrowed funds and non-business use, then only disallowance can be made. Now I'll give you a few examples. There may be a situation where funds for non-business use have been taken out of CCOD accounts. There may be a situation where funds for non-business use have been taken out of CCOD accounts, but if it is a mixed bag, that sale proceeds are also deposited in ODCC account. If it is a mixed bag, that is sale proceeds are also deposited in ODCC accounts, then we can objectively determine whether borrowed funds have been used put to non-business use. If you can establish that funds have been borrowed for non-business use out of collection from debtors, then we may not opt for computing disallowance on this very premise. Then there is a proviso in 36(1)(3) fixed asset construction. If client can furnish proof, sufficient proof, adequate proof that fixed asset has been put to use in the business, then naturally there can't be any disallowance. Because once asset is put to use in the business, then any interest expenditure is allowed as business expenditure, as revenue expenditure. Next one, clause 23. Anil ji,
Yes, sir.
Anil ji,
Sir, बोलिए sir.
till what time should I continue?
Sir, 10-15 minutes, no issue.
Thank you. Clause 23. Particulars of payment made to person is specified under section 40 capital A subsection 2 clause B 40A 2B. Particulars of payment made to person is specified under 40A 2B. Facts have to be reported as such, and there is no question of any discretion in reporting of fact. Now friends, what you have to see and how you can save your client. Here relationship has to be closely followed, and relationship wave has to be scrutinized very closely. I'll give you an example. Holding and subsidiary companies are not related parties, vice versa. Holding and subsidiary companies are not related parties, vice versa. In this case, it must be remembered that payment transaction from holding company to subsidiary company is not covered under 40A 2B. Since holding company holds substantial interest in subsidiary company, and subsidiary company does not hold any substantial interest in holding company. If subsidiary company makes any payment to its holding company, then transaction would be a related party transaction for the subsidiary company. Mind you, if subsidiary is making payment to holding, then transaction will be a related party transaction for the subsidiary company. But if holding company is making payment to subsidiary, then it is not a related party, because holding company is not controlled by subsidiary company. Rather, holding company controls subsidiary company. So subsidiary company is under the firm control of holding company. So any payment by subsidiary to holding is a related party transaction for the subsidiary company. So my statement, holding and subsidiary companies are not related parties, vice versa. Please remember this. Next one, it is applicable for revenue expenditure only. It is applicable for revenue expenditure only, that if payment has been made for expenses which are being charged against business profit. That is, it is not applicable for capital expenditure. Next one, AO has to prove it to be excessive. Payment made by related party, AO has to prove it to be excessive. It can't be excessive in its entirety. It can't be excessive totally on totality basis. That is, AO has to give objective evidence that it is excessive and to what extent is it excessive. Now, if the transaction had been between two unrelated parties, if the transaction had been between two unrelated parties, AO had no power to determine whether it is excessive or not. Power has been conferred on him only under this section when it is between related parties. Next one, my friends, if a transaction is tax neutral, if a transaction is tax neutral, 48(2) can't be resorted. That if you are saving 30% and related party is paying 30%, then transaction is tax neutral. Then there can't be any disallowance. Now, if the payer party is also paying service tax on his expenditure, if the payer party is also paying service tax on his expenditure, then it can't be established. Then it can be established, can be proved that no party will arrange his business affair in such a way so as to pay more tax, and consequently section 40(a)(2) can't be resorted to by AO. So whenever you are talking about a payment, particulars of payment made to person specified under 48(2)(b), you have to be sure on all these accounts. It has to be revenue expenditure. It has to be paid by the related parties. It can't be for capital expenditure. AO has to prove it to be excessive. It can't be excessive on totality basis. If a transaction is neutral, tax neutral, if transaction had been between two unrelated parties, then it can't be there. AO had no power to determine. Next, any amount of clause 25. Clause 25. Any amount of profit chargeable to tax under section 41. You never come across it easily during tax audit. And of course, reported amount is normally nil. Section 41 talks about deemed income. Section 41 talks about deemed income. That is, burden is on AO. Burden is always on AO to prove that all the ingredient of section 41 is fulfilled, and hence there will be application of section 41. I'll give you only one case law, 409 ITR, 409 ITR 202, 202, 409 ITR 202, Punjab and Haryana High Court. Principal CIT versus Eco Auto Components Limited. 409 ITR 202. Merely by virtue of fact that a debt has become time barred, right of creditor will not come to an end, nor liability will cease, and under in these circumstances, section 41 is not attracted. So when a liability quo, the amount which is still standing in the balance sheet, which fact has not been disputed by AO, the same can't be said to have ceased. If AO alleges that your creditors are lying unmoved for years, why he should not presume that creditors have ceased to exist? In fact, burden is on AO to prove, and that if he is found wanting, then no addition can be made by AO. If liabilities are being acknowledged in the balance sheet and are being shown in the balance sheet, there is no question of cessation of liability. Loan from bank waived. Loans from bank waived. Since loans are not claimed as expenditure, hence can't be treated as deemed income. 404 ITR 1. Supreme Court, Mahindra and Mahindra. 404 ITR 1. Loans were not claimed as expenditure, hence can't be treated as deemed income. Waiver of working capital loan, deemed income considered under in the case 53 DTR 50, 53 DTR 50, Logitronics case. Clause 26. in respect of any sum referred to in section 43B. Whether clause A, B, C, D, E, F or G, section 43B, A to G, in respect of any sum referred to in clause 43B. Now, what is 43B, sir? If a liability has not been paid, it is disallowed, we all know. Now, let's take a case. Which method of accounting you are following, exclusive method or inclusive method? If you are acting as a conduit, if I am acting as a conduit, that is, I'm collecting and paying, and my books are being prepared under exclusive method, then I am not entitled to claim deduction for those taxes which have been collected and paid by me as a conduit. If you are following exclusive method of accounting, then no disallowance can be reported, because neither I am claiming as it income or nor I am claiming it as expenditure. I am merely acting as a conduit. If I am acting as a conduit, I am collecting and paying. So it is neither my income nor my expenditure. I must claim it as expenditure. Then only it can be disallowed. So if I am merely acting as conduit, then there is no question of disallowance. Another very important aspect, clause 27, subclause B. Particulars of income or expenditure of prior period credited or debited to profit and loss account. Normally you see, whenever we say, we point out, we are able to figure out any prior period item, we say it is disallowed. It can't be debited. But there are certain propositions where you can ignore it. If the crystallization of liability has taken place in this year, if the crystallization of liability has taken place in this year, and even if it relates to prior years, if the crystallization of liability has taken place in this year, and even if it relates to prior years, it can't be treated as prior period item. If there is a spillover of prior period expenses constantly, maybe for not having information on timely basis year after year, then on the basis of following judicial expositions expounded as law by courts, even prior period expenses charged in the current year will be allowed. If tax rate has not changed and it remains same, then also it is tax neutral and allowed. 100 ITJ 373, 100 IT TTJ 373, Mumbai Tribunal, 100 TTJ 373. Information about expenses having been received by AO after close of financial year in relation to earlier years, deduction can't be disallowed. Cuttack Bench, 101 TTJ 948, 101 TTJ 948. Expenses incurred on nitric acid, short charge during earlier year, detected during current year is allowed as expenditure. Year is not important if tax rate remains same. 331 ITR 10. 331 ITR 10. Year is not important if tax rate has remained same. Clause 31. Clause 31, you remember, friends, there is clause BD. Clause 31 BD. Subclause BD. You remember section 269 ST, where it said particulars of each payment made in an amount exceeding rupees 2 lakhs rupees to a person in a day in respect of a single transaction or in respect of transaction relating to one event. Made by check, not made by check or bank draft, not being account pay check or account by bank draft, then name, address and PAN of the payee has to give in. Even they have asked for negative component. They asked for, it was regarding receipt. They are asking for payment. Remember 269 ST. It was receipt. Even negative covenant has been asked for. Reverse information has been sought for by the department. Amazing. In section 269T, repayment is regarding repayment. Unique manner of definition of loans and deposit in case of company. Loan or deposit means repayable after a notice or repayable after a period. Amazing definition. One very important one, normally there is a lot of dispute on that. I'll give you a way out. Clause 15. No, clause 17. Let me discuss this. Just it will take only 2 minutes, Anilji. Clause 17, section 43 CA and section 50C. In clause 17, friends, you will find that what is the assessable value, what is the set forth value, and what is the difference. Assessable value is, suppose, set forth value, that is in transaction you have done at 5 crore. Market value, assessable value or stamp duty value is 7 crore. You quote 7 minus 5, difference is 2. CPC will definitely add 2 crore. What is the way out? Because CPC we may add on the basis of information furnished by a tax auditor. What is the way out for assessee? I'll suggest it that you report it in clause 3 or clause 5. You report it under clause 3 or clause 5, depending on whether you are following form 3CA or form 3CB. And on the strength of representation from taxpayer. What is the representation? You take a representation later from taxpayer that he strongly feels, and he is a valuation, having valuation report, which says that assessable value is not realizable. Stamp duty value is not realizable. Stamp duty value is not realizable, and they have sold at highest possible market value. They have sold at highest possible market value. Thanks, Rumta ji. Anil ji, it's all up to you.
Thank you, sir. Anil.
Anil ji.
Anil, made you the co-host.
Yeah. Actually, I could not unmute myself. So thank you, sir. Thank you for your wonderful deliberation on the given topic, that Form 3C tax audit all over. And you have nicely covered all the clauses, almost all the clauses. And I request the participant, if there is any further query, then they may raise their hand so that Rahul can unmute you and you can raise your query. Anybody has any query, please raise your hand.
Anil ji, I have lost 14 participants. There were 105. Now I have only 91. 14 participants.
And gradually we lost everyone, sir.
During course, I have lost 14. That is my bad
Yeah,
luck.
so the learned friends might go away. So if there is any query, participants are requested to raise their hand just so that we can discuss the issues. Anything?
No query, I think.
So I think, sir, you have covered all the things, and the
I
doubts
could not
are
cover
all,
all, but I have covered the critical
whatever
ones.
you
I
have covered, the
tried my
doubts are
best.
all cleared. I think there is no query as such.
It's two-way, Anil ji. Either it is Imran Khan bouncer, which everybody could defend, or nobody could defend.
You rightly pointed out. So thank you so much, sir. Once again, now may I request CA Rahul Rumta to offer a vote of thanks and conclude the session. Rahul, please.
Thank you, Anil. Thank you, sir. Thank you, sir, for the wonderful session and for the wonderful deliberation, sir. मनोज जी सर, आप you're always very kind to us. Whenever we ask you or request you for time, you have you have always obliged us, sir. So we are very, very thankful to you. And
Rahulji, one thing, today I'm extremely sorry for joining late
No, no, sir. No
because
issue. No
I
issue.
could not help it. There was a certain glitch.
It all about technical issues. It happens, sir.
sir, all these are part and parcel of life, sir.
Yeah,
All
yeah.
of us understand.
Yeah,
this.
yeah.
ये सब
You
होता
must
रहता है,
admit
sir.
this fact. Yeah.
Correct. Sir, again, thank you very much on behalf of all the participants for sharing your time and for sharing your knowledge with us. Sir, on behalf of the participants and on behalf of the association, I would like to offer a small memento to you, sir. Uh, Sir, this is your e-memento, sir. If you can see my screen.
It will be
So,
mailed.
sir, this is it, sir.
Wonderful.
So, sir, thank you very much, sir, for the wonderful deliberation. आप बोल रहे हैं people लोग drop off हो गए, लेकिन हमको लग रहा है लोग drop off हुए जब आपने bye बोला कि ठीक है सर, over to you. तब अब उनको समझ में आ गया कि ठीक है, then these are regular formalities. तब वो drop off हो रहे, but still, sir, we have got 80 people who are with us and who are
I really
absolutely
enjoyed
happy to have attended to today's session, sir. Thank you very much, sir. And
I
on behalf
also
of
enjoyed. Thanks a lot.
Thank
Thank you,
giving me
sir. Thank you.
opportunity.
Thank you very much, sir. Thank you.
Thank you, sir. And on behalf of the study circle, I thank every participant for participating today, those who are and those who have left. Thank you for participating and for making this program a success. Thank you. And we look forward to seeing you in future programs of VIPCA.
Definitely. Yeah.
And we also request the members who are not members of VIPCA Association, so please become a member of VIPCA and enjoy your life also. Thank you so much, members. With this, we conclude this meeting. Thank you. Thank you, everyone.
Thank you. Thank you.